Hello, I'm Eric Fernwood. Welcome to another Las Vegas real estate video. One of the most frequent questions I get after people realize the advantage of real estate is, how do I get started? In this video, I'm going to give a very high-level overview of the basic steps. First, what constitutes a good property? 2, what is rehab? 3, what is the role of the property manager? And a general overview of the process. So let's get started. Okay, what is a good investment property? Well, my definition is it's a property where the income, the rent, is much greater than all the costs. And I believe appreciation is an important factor too, but it certainly is not the key factor. Packard of Hewlett-Packard once made a statement I really liked. If you're making a serious profit, it's hard to go broke. Well, I think a lot of people who ran into financial problems just chose properties and they didn't do the analytical homework they should have done. Now, the role of analytics. I provide my clients extensive analytics that no one else does because I wrote the software that generates them. But basically what you want to be doing is selecting not only the best rental properties, but properties that will provide a good positive cash flow. I'm talking about something like 8% return on your investment prior to tax advantages. Now, just because analytics say a property is good does not mean it's good. If analytics say a property is bad, it probably is. But what other factors should you be considering? Most of these have to do with common sense. Real typical example is there's no living space in the family area. No analytics give you that. Rehab costs are exceptionally high. I talk about rehab costs later in this video, so I won't cover it here. No appreciation. There's certain areas in any city that are going down, and that's not a good place to invest. If the house has a lot of maintenance and is going to have a lot of maintenance, that's a big factor as well. What if you considered getting a property in, say, a student area? Most of those lease terms are going to be by the quarter or semester. That's not a very good way to have a sustained cash flow. So analytics will eliminate bad properties, but common sense select good ones. Rehab costs. Now, rehab costs is the minimum repairs needed to bring the property to area marketable conditions. As far as the actual calculation process, check my website. I have a separate video on how to do this. Now, what is really important in this sentence is area marketable. Too often I see people who've been watching these TV shows and they go in and they put way too much money into the house. You want to bring that house to where it is equal to the better, but not the best, equal to the better properties in the area. So for example, what if you really like stainless steel appliances, but all the other houses that are renting well just have basic white enamel or black enamel? You're putting additional money into stainless steel appliances may not get you any increase in the rent, nor may it decrease the time to rent. That's a waste of money. So you need to be careful about this, and you either need to be working with someone who knows what they're doing, or you really need to do your homework. But rehab costs are the minimum repairs needed to bring that property to area marketable conditions. Okay, the next most popular question I get is, what does the property manager do? Well, the property manager does everything. You should have no contact with the tenant. Never. The property manager will coordinate the rehab when the property is first purchased. He markets the property seeking suitable renters. He screens renters, and if your property manager is only doing a credit check, you need a new property manager. He needs to be talking to the references who they rented from in the past, because there's plenty of people with good credit who trash rental properties. He collects the rents, and if they aren't collecting the rents, he notifies them. If they aren't going to be good tenants and pay the rent on schedule, he's going to handle the eviction. He manages any repairs that occur, and the tenant always contacts the property manager. If you get between the property manager and the tenant, like the tenant's calling you, you deserve problems. You never, ever, ever deal with a tenant. That is only the job of the property manager. The property manager also has to monitor the property condition. In most cases where I've seen properties that are just destroyed by the tenant, what's happened is the property manager never went in to visit. During the first year, he probably needs to go in there twice, and probably once a year thereon. What he's looking for is, what is the ongoing condition of that property? He communicates. He is the single and sole channel. You only talk to the property manager, and the property manager is the only communicator with the tenant. This is the guy who's going to keep you profitable. So let's look at the process. Now, what I'm going to explain is how it is if you work with me. With other realtors, since they don't provide any sort of market value, they don't provide any sort of rent estimates or rehab costs, you're going to have to do this yourself. But let's proceed on with just if you're working with me. Based on things like rehab costs, rent estimates, time to rent, market value, and so forth, you would have selected one or more properties. An offer is then made using a standardized form. Las Vegas is very well organized in terms of their contracts, and everyone uses the same documents. Once it's under contract, usually then a 10-day due diligence period starts. During the 10-day due diligence period, for any reason, you, the buyer, can cancel the contract for any reason. Okay. The information that you're going to get new during this period is from the property inspector. We'll start with him first. He's going to do a thorough inspection of the property and then give you a written document of the property's condition. Now, this is one of the places where the rehab costs will have to be adjusted, because he's going to discover things that were not found during a casual walkthrough. The property manager that you're going to be working with will also visit the property. Independently, he's going to give you probable time to rent and probable rent. He's also going to make recommended changes and repairs list, and these are going to be different than the property inspector. For example, if the interior of the house is painted pink, the property inspector doesn't care as long as there's not a problem with the walls that are painted. The property manager is going to tell you that the house won't rent in those colors. So you're going to get these sets of data. With these sets of data, updated rehab costs and so forth, you'll make a final decision whether to proceed with the purchase. If you do so, then there's 30 to 45 days from the time it started until close of escrow. The close of escrow is a fairly short process in Las Vegas. We're a non-judicial state. The time to rehab is going to depend on what needs to be done, but in most cases, I will have had people in to give cost estimates along with the property manager during this period, so that as soon as the escrow closes, they can do the work. Many times we have the work done in under 5 days. Once the work is done, rehab is complete, the house is ready to rent. Depending on the type of repairs needed, the house might be showable starting here. But that's generally the process. So I, as the realtor, basically are driving the show through close of escrow. The property manager picks it up at close of escrow and works with it from then on. Here are a few other thoughts. First of all, to learn how to do real estate, probably the least expensive and the most effective is just watch the videos on my website. I've spent a lot of time and effort putting these together. I'm an experienced investor. I've owned over 30 properties, and I've tried to put everything you need in one place. Next, find a realtor who has owned investment property and can provide good guidance. This is really important. Typical realtors can take you out to see properties, but not very many can tell you which ones to look at. Lastly, I do not recommend any of the seminars. The ones that I have attended, and I have attended several because I get free invites, they want to impart some great secret. Well, the reality is there is no great secrets in real estate. And these $1,000 weekend type seminars, at the end of it, you're poorer by $1,000. You probably got less than you would have gotten out of just spending a little time on my site or just reading a book than you would have going to this seminar. These are raw events, and they're really not, at least the ones I've seen, very good at actually getting the information you need. Okay, that brings this video to a close on getting started in real estate investing. For more information, check out both the videos and the web pages on my website at www.ericfernwood.com/invest. There you're going to find most of what you need. Thanks again for your time, and I hope to see you again soon. Bye-bye.